I'll have to be honest with you. First thing I'm going to mention right up front is it's free. I like this service when it's free because, you know, you can tie up a lot of money in different services, and from experience I found out that sometimes you can pay a lot of money and you may not be getting that much out of it.
Good afternoon, welcome to GrainTV. It's February 11th, 2014. I'm Logan Burgess. To my right here is Cody Bills to help break down the action one day after the January USDA report. Let's jump into the quotes here and see where the grains closed the trade session out in Chicago. Corn was off $0.015, soybeans up 9 1/4, Chicago wheat up 5 1/2, and Kansas City wheat was up 2 3/4. Let's quickly recap what we saw yesterday from the USDA. Corn had a bullish report here, ending stocks lowered by 150 million bushels. Soybean ending stocks unchanged from the January report at 150 million bushels. And wheat was a bullish report there as well, came out quite a bit lower than what the trade was expecting. Cody, let's take a look, though, at the soybean market. As we said yesterday, traders expected soybean stocks to be lowered. The USDA left ending stocks unchanged, and today we saw a positive reaction. A little bit of an interesting trade here. What's supporting this market?
Yeah, it was actually kind of a bearish report, and yesterday, you know, we really didn't see any significant selling. We saw a little trading up and then selling off, and we expected to see a little bit more selling today, but really there's three reasons why we didn't. One was the fact that soy oil, soy meal, both of those finished higher here today. That supported soybeans. We also saw that Brazil's government agency CONAB reduced its forecast for Brazilian soybeans down to 90.01 million metric tons. That's on par with the USDA. Now, one thing they cited is that the heat in Brazil has not affected the crop significantly yet, but if this heat continues, they will have to revise this thing lower, and that would be reflected in March. So keep a close watch, again, on South American weather. On top of that, the third thing that I think really helped this market out is export sales. Traders are expecting to see cancellations. We haven't seen them. In fact, we saw additional sales here for 14-15 with 116,000 metric tons going to China for new crops. So all those reasons I think kind of added to some buying support here for soybeans, even though technically you wouldn't expect something following that kind of a report.
Yeah, you know, corn here was a different story. If we take a look at the March contract here on a daily chart, you can see that we actually traded a little bit lower here in today's action, and I think this may be a little bit of follow through from relative weakness yesterday after the report. We talked about it some yesterday on GrainTV. What should have been a bullish report for the corn market really did very little to move prices higher. To me, it looks like a market that's losing a little bit of steam. We saw a good run up leading to the report, but it seemed like traders were content selling this March contract late yesterday and into today. It's a little bit concerning here for prices moving forward, I think, when we see what should be a market-moving report to the downside, and traders use it as a pricing opportunity.
Yeah, absolutely. I wouldn't be surprised if we end up kind of chopping around here, trading in a range sideways. I wouldn't be surprised either if in the next couple days we do see some longs continue to be taken out the table. Other than that, guys, that wraps up today's show. If you have any questions about what we talked about today, give us a call at 877-472-4607. And remember, you can take a demo of our mobile trading platform at grainhedge.com and watch the markets live on your phone. Thanks a lot for tuning in. We'll see you here tomorrow.